Tony Skursky, the broker here at Transaction Realty. Today with me I have Nick Mazzone from Carter Palmer. Nick, welcome to Transaction Realty.
Thanks, Tony.
Hey, what we're going to talk about today is some of the things that realtors can do to be better prepared for their taxes when tax season comes around. But obviously you want to be prepared before tax season comes. So one of the big questions I always get is, should an independent contractor have like an S-corp or a limited liability? Could you tell us about some of the options?
Sure, Tony. First of all, thank you for allowing me to come in this morning. When you're an independent contractor, especially in the real estate industry, you're performing a service, and that service, periodically things can go wrong. So what you'd want to do is, in order to protect yourself, is protect yourself with limited liability by setting up an LLC, a limited liability company, or an S corporation, which will allow you to incorporate and also protect yourself, and you'll be able to reap a few more benefits from that.
Okay, and then how does that work in then with like retirement plans? Does that is there advantages for that?
Correct. You can set up different retirement plans, whether you're self-employed or as a member of an LLC or as a shareholder in an S corporation. As a self-employed individual, your options are a lot greater as far as the amount of money that you can set aside. It can be as much as 25% of your net income, which and I think the limitation for this current year is about $54,000.
Great, great. And what are some of the pitfalls that self-employed people have?
The main one that I've seen over the years, and I've been practicing for quite a while, is their failure to separate their business life from their personal life. A lot of times they feel, well, I need money to go grocery shopping and I don't have my debit card with me, but I have my checking account for my business. So I'm going to use that to go to the grocery store with. Or I'm going to use a business card to buy gasoline with, things similar to that. That's the main problem that most self-employed individuals face. So what you'd want to do is be able to separate your personal business from your business, for lack of a better term.
So are people trying to take that as an expense then? Like personal items for an expense? Is that what's happening?
They can. I'm sure it's all unintentional. But in case of an IRS audit, if the IRS will ask you for your business bank account, if you can't produce a segregated business bank account and produce your individual account and tell them, well, I write my business payments out of here and I start commingling income, you're going to have problems.
Okay, and that's something then they can even go back a couple of years, huh?
Yes, the statute of limitations is 3 years for your federal income tax return, and God forbid there's any incidents of fraud, in which case there are no statute of limitations. They go back as far back as they can.
Well, that's some great advice, Nick. Thanks for coming in today, and if you'd like to hear more about some of the advantages and disadvantages of being part of a S-corp or a limited liability, tune into our podcast. Nick, thanks for coming in.
Thanks, Tony. Thanks for having me.